welcome back to our Around the Block, Volume 7. Today it's just me and Philip here, but it's lovely to have you again, Philip. How are you doing today?
Doing well, Jasmine. Got some green across the board, a nice little pump on some exciting news coming up. Yeah, things are looking pretty good for now. We'll see going forward, but things are in the green for today. So it's a nice change from how things have been recently.
Definitely. I agree with you there. It was nice to see some of those pumps we got, and we'll definitely be getting into that today, along with some other really great topics, including, kind of continuing on some of the topics we've been talking about in the past around the block sessions. To keep you guys informed, maintained on, what's going on, what's happening with the market, and what we can expect to see in the future. But we have a lot of content to cover, so let's go ahead and get into it. So, Philip, what do you have for us today?
Well, I believe the big story is the merge announcement this week. So on July 14th, Tim Bako, a core dev at the Ethereum Foundation, gave a soft launch announcement date of September 19th. He posted what are apparently looking like meeting notes from an Ethereum core dev meeting for a soft launch for the merge to go live on September 19th. For those who don't know what the merge is, it will be the points at which Ethereum officially switches from a proof of work to a proof of stake model. And that is very bullish news. In fact, so bullish that it's really pumped the markets up a lot this week, particularly versus Bitcoin. Jasmine, I believe you have a chart that kind of shows how Ethereum has been catching up to Bitcoin as of late. If you wouldn't mind popping that up real quick.
Yeah, I'll go ahead and share my screen, guys. So give me a second here.
Just given the overall macro picture, how big of an effect this is having on the market. So as you can see on the screen on the right, the Ethereum Bitcoin chart, if you wouldn't mind going back to the 14th, Jasmine, when the announcement was made. Yes, that giant green candle. You passed it. Oh, no, there it is. I apologize. Yep. Okay, so there's the merge tweet. Sorry. But there's the merge tweet. So as you can see, it immediately began to climb as soon as that came out versus Bitcoin price. And it really, like I said, goes to show the strength of this narrative of Ethereum switching to a proof of stake model that not only attracts people from the ESG crowd who have had an issue with proof of work, but also makes it potentially more deflationary, according to the tokenomics, just given the usage of Ethereum now as a staking mechanism and as a way to pay for gas. So it's really exciting to see that coming up. And it wouldn't be a surprise if that date got pushed back, but just the sheer news of them having a date had a impressive impact on the price. So yeah, it's really exciting in the short term. Jasmine, do you have any thoughts about this?
Yeah, I mean, Ethereum is already one of, if not, one of the top gainers amongst the crypto winter right now, especially, but it's always been on the top. And for me, Ethereum is something that I've always believed in. And now with the way they're moving, it just makes me more excited to see where they're going to go in the future. And, once we break past the ice here, really getting to where Ethereum is going to take off. I know right now we can only be so hopeful within the market that we're currently in, all of the macro factors that will still affect cryptocurrency and the financial market in general. But this proof of stake model, the beacon chain, it's really going to open new doors. It's going to make people more confident, and hopefully, those regulations don't affect this too much. but I definitely see great things in Ethereum's future. I'm gonna touch my crystal ball here, and hopefully we won't fall too down from where we're pumping up right now with the great news. And if there's no more extensions, because prior it was going to be in August, now they're pushing it forward September, which is not a bad thing, because then its birthday will technically be a Virgo, right? It'll be super exciting. It's actually 2 days after my birthday if it actually comes out, so it would be an amazing birthday gift if we get really great pumps from that. So super excited.
Yeah, it's great. Be a nice birthday gift.
Definitely. I want to see only green candles. No red candles, please, on my
Only
birthday
green
cake.
candles on the cake, yeah. But yeah, it'll be interesting with the upcoming macro picture. I mean, this entire first half of the year, the story's really been inflation increasing, recession fears, dollar strength, which we could discuss a bit more later in the macro news. But we have a lot of these headwinds pushing against this price action while we have this positive news. So as I said, short term, this is great. We'll see what happens. Specifically next week, we have some big announcements, particularly the July Fed meeting. So at this meeting on July 26th, they will be deciding how much they will be raising interest rates. Now, for those who aren't aware, interest rates increases basically make paying back debt more expensive. So the people who would be otherwise spending that money in, say, risk on assets like Bitcoin, Ethereum, are instead paying back debts or stacking up in cash to be able to pay back, like I said, what they've taken out. So they've predicted a 75 basis point increase, which is what they did at the last meeting. However, up until a week or two before last meeting, the expectation was that it was going to be 50 basis points. So the 75 basis points took people by surprise. And I believe they raised it because the CPI numbers, which we'll discuss in a moment, came in higher than expected. So they raised expectations, raised interest rates, and that really had an effect on the market. And if you wouldn't mind showing the Ethereum and Bitcoin charts, we can actually see that in real time. On July 13th, we actually had a record high inflation number or CPI print announcement. Wouldn't mind going back real quick.
Let's go back to the past here.
Yeah. But yep, there it is. So the announcement was made at 8:30 a.m. and within 15 minutes, Ethereum had dropped 7% immediately. As you can see, it proceeded to rebound from there. But a drop that large in such a small amount of time, if you're a futures trader, for example, and you have a collateralized position, that could easily wipe you out, that 7% movement. So around these announcements, you want to be careful. If we could go to Bitcoin as well real quick, we'll see the exact same thing. As soon as those inflation numbers came out, it proceeded to retrace. If you wouldn't mind going back to...
Yeah, we're a little bit large here, so we can expand. As you can see here, we're in July. Let me get my cross here. So you can see on July 13th, 14th, we started to get a little bit of that raise there.
Yeah, if we had the 15-minute chart up, you'd see basically the same price action.
You can change that real quick too.
Okay, great. Yeah, within 15 minutes of the announcement on the 13th, Bitcoin had dropped by 7. Nope, so I think it's actually 1 day back.
Oh, on the 13th.
13th, yeah, the 13th.
Move my little circle here. And
So by that
that.
15 minutes after that announcement, Bitcoin had dropped by 5%. So again, if you are a futures trader, as a lot of us are here on Vector, that could easily wipe you out. So you want to be careful around these announcements. Probably go a little risk off and then see what happens, because as you can see right after that, there was a great opportunity to go long. It was really kind of a knee-jerk reaction by the market, and then it
Or really
immediately
late
recovered.
on.
Yeah, exactly. So as you can see, it proceeded to go up from there. Definitely riding on the back of that announcement on the 14th. But it goes to show how important this macro news is. So the next big one we have is July 26th. And if it's a 75 basis point rate hike, we might see some good positive price action or minimal negative price action. If it's 100 basis points, then brace yourself, because it may be kind of rough. But yeah, that's something to definitely keep an eye on going forward in terms of macro news. But going back to the ETH announcement, we have some big gainers as a result of that. Leading the charge is Lido DAO. Now, Lido is a platform that allows for liquid staking. In preparation for ETH 2.0, what people do is they stake their Ethereum to secure the network, and are essentially given a percentage yield. I believe it's around 5%, if I'm not mistaken, for securing the network. With Lido, you're able to stake your Ethereum for Ethereum 2.0 through them. And not only do you get that percentage, they give you an additional yield, as well as a derivative of ETH called staked ETH or STEETH. And with this, you're able to take this crypto STEETH and use it in DeFi protocols, use it as collateral, buy it, sell it, trade it, whatever. But you're able to have that underlying exposure to your Ethereum. You're able to still stake it and support the merge, but still have options and liquidity with your Ethereum. So clearly it's pumping on the merge announcements. And Jasmine, do you know anyone that does any staking or liquid staking, or is doing anything for ETH2?
Yeah, actually, I myself have staked into ETH2, and I did lock mine. So, if I was trying to pull out and with this pump, it was not going to happen because I locked all of my stakes there. But it's a great way to, get in that yield, make a little bit more, especially if you believe in the project, you believe in the staking rewards that are to come, and you have done your research into the platform and liquidity and everything like that. We're not just staking on any exchange. We're doing all of our research, doing all of our due diligence, staking on a platform like Lido. It's really great for long-term trading, I would say, and that's exactly why I decided to lock mine in there. I knew, hey, this is something I'm in for the long run. I'm bullish long-term. Even with the bear market right now, I'm still going to be bullish long-term. I'm going to hold out. I'm going to be patient. I'm not going to be greedy, and I'm going to continue doing, what I need to do in terms of my trading and my assets. But I know quite a few people that are currently still staking as well, and that are really excited to continue. We know that.
Where are you staking? Because I know there's different types of staking. Are you using Lido, or are you using centralized exchange?
So I had a lot of my funds really, or my asset, because I wanted to move over from, regular federal banking systems. And I did decide to make the move over to Coinbase. So I was receiving, direct deposit on Coinbase. Any money I would transfer over to Coinbase, and I have the Coinbase debit card. And that would be my kind of way of being able to use crypto daily and not having to always transfer money into just my change, buy, sell. I always had it coming into a stable coin, spending my stable coin, getting rewards from that as well. which is always great. So I did end up staking off of the Coinbase platform. Um, but in some recent news, I have, as soon as I see my lockdown period come out, I do plan on moving over to Lido, just because I believe that there are some better safety measures on there. And, with the Coinbase leak, I just want to make sure that my assets are protected in terms of anything that might happen with liquidity. I don't think that their recent leak or announcements have anything to do with their liquidity, but we never can predict the future, and we always want to be cautious, especially in the times that we're in right now. So I think it would just be a safer move to get it over onto the Lido system here.
And that's the difference between staking on a centralized exchange and staking on a decentralized protocol like Lido. With centralized exchanges, as you've seen in the past couple of weeks with Celsius, with Voyager, with BlockFi, if they have your assets and they go under, you might not see those assets. So they really control, your money at that point if you are staking through them. Whereas if you're staking through a native platform that's decentralized, then you technically always have access to that. There is smart contract risk. That's something you do have to worry about, and you do have to check to see who. At some point there is some sort of centralization. However, the control of your assets stays with you, and I feel like that's one of the really important parts. Even if the validation and the back end stuff is more centralized, the fact that you get to hold and control your assets is important. And just so you know, with Lido, it's similar to what Jasmine's doing, where once you stake your Ethereum, or once you swap it for staked ETH, it is locked up until the merge is done, and then it's released, much like the other platforms. I'm just kind of wanted to highlight the difference between staking on a centralized exchange, where it may be easier and it may be slightly more convenient, but there are other risks attached to it, as you've seen with these other centralized platforms in recent weeks.
Yeah, and that's a really great point to touch on. Like I said, I mean, I don't foresee that Coinbase is going to, get into the 3AC contagion. I don't believe that they're going to be anywhere close to what, was happening to Voyager and Celsius. But again, we can't predict the future, and with a centralized exchange, we don't always, we can't foresee like, hey, this isn't going to happen. So it's sometimes, being safer than sorry. And we did see after the leak, and if you guys don't know what happened, basically Coinbase, there was a leak where they have suspended their affiliate program just due to the harsh market conditions. There are a few tweets that kind of surrounded this situation, including the person who says they, created the affiliate program in 2019. They're saying, shutting it down has nothing to do with the liquidity. And Dan Held also says, no, Coinbase doesn't have a liquidity crisis because they shut down their affiliate program, with the rolly eye emoji. So this just goes to show we do have some supporters and, some people trying to back the platform up. But again, in terms of being safer when trading and proper risk management, it's just a safer decision, in my opinion, in my personal trading affairs, to move over to a platform like Lido, where it's decentralized, backend decentralized. I hold my assets, and there's no concern in the end that my money could just be, pulled away. And then, what do I do, right? I just staked all of my ETH, something that I believe in. And it's not ETH's problem, right? It's not ETH's fault. It's the exchange you chose to go on.
Yeah. So in addition to ETH, we have some other winners that have been benefiting from the merge. Besides Lido, which obviously has directly to do with Ethereum too. That's one to keep an eye on going forward. Polygon Matic is up 55% over the last 7 days, 178% over the last 30 days. And I apologize, I don't think I gave the Lido appreciation recently. So Lido's up 170% over the last week, which is essentially a week since that announcement, and 172% over the last 30 days. as I was saying, Polygon Matic 55% over the last week, 178% over the last 30 days. And Polygon is a side chain. It's a layer 2 solution to Ethereum. So rather than paying those high Ethereum gas fees, Polygon allows you to technically do a lot of the same things on Ethereum, but for a fraction of the price, essentially. So in its association as what's called an EVM, or Ethereum Virtual Machine Compatible Chain, it's benefiting from that. And also another thing was recently with essentially the collapse of the Terra Luna ecosystem, many of the projects and protocols, I believe over 40, have moved over to Polygon Matic and have started building on there. So they have a whole bunch of building going on there, a lot of, smart, talented people. They have a lot of money. It seems like they're in the right place at the right time right now. I know they also had that Disney announcement that we went over last week. So they're really making a lot of moves to integrate themselves throughout the entire crypto ecosystem. And then another is Avalanche, that I believe just in association as another EVM compatible chain has been positively affected by the merge announcement. It's up 24% over the last 7 days and 43% over the last 30 days. And then the last one that I'd like to touch on is Aave. I mentioned it last week as they'd announced they were creating their own stable coin, and it's up 22% over the last week and 100% over the last 30 days. Now, I don't believe this has as much to do with the merge as the other coins that I discussed are, but more so the announcement of its stable coin that's going to be creating, GHO, as well as these CeFi lenders failing. I think that gives more credence to these decentralized finance protocols, since they functioned as normal. A lot of these big CeFi lenders like Celsius had assets on these trading platforms, on these lending platforms like Aave, like MakerDAO, and they really aren't able to not pay back their loans like they're able to do with these other companies, like these lenders that gave them under collateralized loans. On those, you have to over collateralize it, typically by about 150%. So if you get liquidated, they're making money. It's not like they lose because you can't pay. They win either way. So I think people are trusting more in the smart contracts for crypto lending rather than the actors in crypto lending, which is very promising. Aave and MakerDAO have basically been operating just as normal. Haven't really experienced any serious issues as a result of 3AC or any of these lending issues. And I think that's that, along with the announcement of the stable coin, which is obviously filling that need that UST left, and where a lot of capital is flowing to stable coins, just because things have been going down so much recently. A lot of people want to stay in crypto. They don't want to go to fiat, but they don't want that much exposure to the volatility, so they tend to move the stable coins. I think it was smart of Aave to see that need, that UST left, and to see how popular stable coins are getting, and to take advantage of that. So according to my analysis, that's what's behind all of those pumps. And it'll be interesting to see what happens, as I said, with that Fed interest rate announcement coming up on July 26th.
Yeah, I mean, with these macro factors, with all of these announcements coming and everything that's happening, I wonder, after this announcement on July 26th, will we get a break when the Fed goes on their summer vacation coming up shortly? Will that be the break that we need to finally break out of this?
See, that actually concerns me, because since they don't meet in August, correct? They don't meet in August. They may have to get ahead of inflation by raising the interest rates more than necessary. So in case they didn't, It feels like the message they've been portraying is that they would rather raise interest rates and risk that than what the other choice is. So a bit of a history lesson I've just been hearing. In the 1970s and 80s, we were in recession, and we had someone who was in the Fed who wasn't raising interest rates enough. The market struggles, and then they put in this guy Paul Volcker, who actually raised the interest rate to around 10 or 15%, and just completely brought us into a recession, but kept us out of what might have been worse straits had he not done that. So I feel like they might try and get ahead of it by raising it more. So that 100 basis points seems more likely, because they're not going to be there, and they want to make sure they're somewhat ahead of inflation and are able, or somewhat ahead of whatever outcome they're trying to avoid. The recession, I apologize, somewhat ahead of a recession while they're on break. So that does concern me a bit, that they will have that extra month and may just jack up interest rates in the meantime.
They're like, well, we're going to take vacation. So before we do that, let's make sure that we cause as much, as much drama and craziness before we do, because, why not?
Yeah. Well, the two jobs of the Fed are to control inflation using monetary policy and the unemployment rate. And I'm not sure, given that it's an election year, how popular adjusting the unemployment rate would be. Well, it's election year in the U.S., excuse me, midterm. So adjusting that might not be as popular with people as the inflation thing, which they're kind of used to already. So it'll be interesting to see, which levers they pull to try and fix this thing. A lot of people think it's already out of control, and I've heard several comments that they're trying to bring it in. Jerome Powell, head of the Fed, said they're trying to bring for a soft landing. However, it may not be possible. And, just him using those words makes me think, like, being on a plane, like, I hope we're going to be landing soft. Like, it's kind of terrifying thinking what happens if we land any harder now. So it'll be interesting to see how they react to these numbers, what they will do going forward, and how that'll continue to affect the market and risk assets like crypto. Because as you can see, and we continue to say this, the institutions are here, and they treat crypto as a risk on asset. So it trades much like tech stocks, although I believe that correlation has been going down as of late, but it's still seen broadly, as a high growth tech stock. So it'll be interesting to keep an eye on those markets as we move forward.
Yeah, I don't know. I do believe that, not if, but when the recession is fully announced, right? Because at this point, it's very foolish to say we're not going to have a recession, right? Or it's just rumors. I do think that it could give a little bit more into the crypto industry, and that it could give us a good push, but it would be detrimental to say that it won't affect us, in any financial market, including fear levels of communities and what communities are putting their money into. Because as inflation rises, as layoffs continue to present themselves, OpenSea just laid off 20% of their workforce, right? We continue to see these companies that are giants, right? Still laying off. We will continue to see that Wall Street's layoffs. We'll continue to see small businesses closing down and not surviving, not just the crypto winter, but the financial struggle that we're all facing. I think worldwide, really. It's not even just the U.S. Panama's having riots.
Yeah, it's actually worse in places like Japan and the Eurozone. I mean, obviously, given the Ukraine-Russia conflict, Ukraine is a massive supplier of energy for that region, particularly natural gas, as well as fertilizer and things used to grow crops. So that's causing a lot of strife and just issues over there in general, particularly those countries that are in close proximity to that zone. So it's as tough as it is in America, it's actually tougher on them, and that's why you're seeing the relative dollar strength go up. The dollar index, the basket of assets that it's weighed against. I believe the euro is the second largest behind it, and then the Japanese yen. And I know that the central banks in those regions have not been increasing rates. In fact, inflation rates are negative. So they really haven't, it seems as if they haven't started to address the problem as much as we have here in the US yet. And that is why the US dollar has started really peaking to all-time highs in terms of strength versus these other assets. But as we explained before, that isn't necessarily good because it makes debts harder to pay back. It makes things more expensive to import. Things like oil and gas are typically denominated in dollars across the larger markets. So it'll be harder for people to afford things in those areas. And yeah, I think while it does kind of look good for the US, I think as a whole, it makes it much more difficult. Yeah. So it's not just a US problem, it's definitely a worldwide problem. I think we're hearing a lot more about the US side, but like you said, in other countries and other areas, they're experiencing much higher rates of inflation and much larger issues. So yeah, it's kind of wild time right now.
Yeah, and so really all of these things, it's kind of crazy because it's like since 2019, the world has just been in this cycle of like we can't get past the drama, we can't get past the the toxicity of everything that's happening, of not being able to be kind to each other, not being able to support our own places of living, our communities. And it's like, when will this end, right? We've been doing this for almost 3 years now. So when can we say we're gonna put our foot down, right? As a whole, as planet Earth, really, I would say, not even just the US, not Europe, not Japan, whatever. When are we all going to put our foot down and say, like, we need to come up with better plans? We need to be better at living here. We need to be better. So that's something that I'm hopeful to see happen, and maybe more countries and places coming together as a whole to make better plans and to start actually doing the things that they need to do to better the community, to better their economic system as well. There's good points to recessions and inflation, and there's negatives. Obviously there's more negatives than good points, right? But the good points being that we open doors for new millionaires to become a part of the world, for new processes to be improved, for things to be put in place for the future, because now we know, oh, this happened, and this is what crypto's first real recession, first bear market. So we don't know how it will perform, and this will be something that will,
I mean, it's gone through some rough patches in the past, but yeah, I think the macro conditions, yeah, it's the first time it's been these kind of macro conditions, and also the market isn't doing well. So, um, like I said, it's reflecting a lot of the participants in it now, whereas before in like 2017, 2018, during those crashes, it was really just retail. These are professionals and institutions and VCs who have a much longer time horizon. Um, it may not necessarily be right, as we've seen with hedge funds such as Three Arrows Capital and others, but they tend to take longer positions, for better or for worse. And it's good and bad to see those people come into the space, because while they do provide like a level of like consistent buyers, you'll see once Bitcoin hits certain levels, like big whales come in and just scoop it up. You always see those Michael Saylor or Nayib Kelly announcements as soon as like you bought the dip. But yeah, it's really interesting to see how people react, and when really is the bottom's going to be in. A lot of people are saying Q3, Q4 of this year, once the Fed is really done with their rate hikes and ahead of it. I think that's really something that a lot of people underestimate. You mentioned the fear and greed. Uncertainty creates a lot of fear. And even if, like, for example, the interest rates, if people knew what it was, or definitely what it was going to be next week, markets are able to price that in. They're able to price that risk in, or able to hedge against it, and it does take them by surprise. But when things, change suddenly and that risk isn't considered, it's what's often called tail risk that isn't like very obvious, but like can impact things. A lot of the time, it's those risks that catch you by surprise. The Three Arrows Capital and the UST thing, things that we thought were too big to fail, that had enough capital. It not only failed but almost blew up everything. But like you said, we learn from it and we recover, and I think that's a important part of crypto. Trying, testing and failing. That's why we have test nets. I actually get offers to test things all the time, like on test nets, and get paid for it. It's actually pretty cool. So, if anyone knows how to use a MetaMask wallet, like there's definitely a market out there for you to just play around with things. And yeah, forget where I was going with that, but yeah, no, just get in the market. Like Jasmine was saying, you definitely want to make sure you have some experience with these custodial wallets like MetaMask, these non-custodial wallets like MetaMask, as opposed to the custodial wallets you have with your centralized exchanges like Coinbase, like Binance US, like Kraken. And yeah, that's a way to kind of get into it.
Yeah, and I mean, now that we've talked about our top gainers, including a lot of surprising top gainers, including Dogecoin being in the top 10 currently, USDC. What are we seeing? Still continuing from the 3AC contagion. Where are those companies now? What's going on? I know that we try to stay on top of this, and especially you, Philip. Can you tell us a little bit more about what's going on with them?
The latest news from the 3AC fallout, as we discussed, Celsius was a large lender to 3AC. And since 3AC basically ghosted everyone, and these loans were either far under collateralized or didn't require collateral at all, which is mind blowing. Basically, people giving them money on their reputation rather than their credit, their actual credit. So that's really where Celsius made their mistake, as well as just really mishandling customer funds and running strategies that really didn't make any sense. I think you touched on it, or we touched on it last week. One investor, KeyFi, is actually suing them due to mismanagement of the assets they had with them. And apparently this account that they had was one of the largest like yield farming accounts in crypto, and people didn't know who it was. This guy, Jason Stone, came out publicly, announced him as the CEO, and I guess the suit that he's presenting to Celsius. So it really seems like they didn't know what they were doing, but his bankruptcy filing showed like even more, like it's just anyone's guess what's going to happen with them. So according to the bankruptcy filings, there's a 1.2 billion hole in their balance sheet, which means they have 1.2 billion more liabilities than assets. And amongst these assets, this number was problematic in itself because it claimed that it has a value of $600 million in its native Celsius tokens. However, according to popular crypto tracking platforms CoinGecko and CoinMarketCap, the total market cap of the Cell token is only 300 million and 185 million respectively. They tend to sometimes report different numbers, slightly different numbers, CoinGecko and CoinMarketCap, just based on the sources they get their information from. But that's a far cry from 600 million. And then, it's been pretty volatile. I've seen a sell short squeeze campaign going on Twitter. So I think it's actually been going up recently for, just internet reasons. But it'll be hard to evaluate that during these bankruptcy proceedings because it's so volatile. And then we're not even sure if it's actually being represented correctly. So that was the first issue. The second thing that came out of the bankruptcy hearing is they're planning on filing. There's different types of bankruptcies. What they're filing is a Chapter 15, which is a plan to restructure the business and kind of bring it back to life, which is crazy. It's like Terra trying to do something again. Who would trust Do Kwon after the Terra fallout? It's who would trust Celsius after this? But they seem to just have that, I don't know, crazy confidence to be able to do the mental backflips to put themselves in a position where they think they're good for the space still. But so basically they're restructuring and trying to get customers some of their money back through their Bitcoin mining operations. I think everyone's pretty much given up on them as a lender, but apparently they have this whole mining operation with I think it's over 100,000 machines they have, 40,000 of which are active right now, and 80,000 of which they are going to have set up by next year. And if I'm not mistaken, I believe that the number of Bitcoin, the value of Bitcoin to be able to create is around 100 million, which is annually, which is decent. And that's profit, after revenue and after everything is taken out, electricity and everything. So even if they are just relying on their Bitcoin mining operations, they're basically going from a lender to just a Bitcoin mining company and trying to pay people back from that profit and that revenue. So it's going to be interesting to see how they swing this and if they're able to do something. But people are kind of peeved, understandably. They're spending money to get this mining operations up and going, and people are kind of hey, you could be giving us that money back. Everyone that used Celsius and gave them money is basically a creditor, because they're a creditor to them in their terms of service. So that basically allows them to, have any have carte blanche over the assets that you gave them. So right now they're taking it, and rather than repaying people that they really, really screwed over, they're expanding and trying to bring the business back and doing this and that. So it'll be interesting to see what happens, especially with that Celsius token valuation. I found that really intriguing because obviously they haven't been as upfront as they should about things. Even days before Celsius announced its bankruptcy filings, their CEO, Alex Mashinsky, was tweeting, hey, don't believe the FUD, hold. I think they sent out an email to everyone to be hey, listen, turn on HODL mode, which I guess is a mode that just, keeps your crypto in there. And the state of Vermont actually sent out a warning to people saying, listen, we don't believe Celsius is solvent. We believe they're heavily insolvent. We've seen no reason to believe what they're saying. We've seen their message about HODL mode, and we think that really that's scamming retail into, being exit liquidity for them. And they're very concerned. And it's really interesting because, like, I don't know if you remember, but last year, individual states such as New Jersey, such as Texas, were bringing various legal cases against BlockFi, against Celsius, and, like, telling them to stop functioning in their states. And at the time, I thought it was kind of crazy. I thought, these states might be overstepping their boundaries, but apparently they saw something we didn't. So it's really interesting to see how this is developing. I really hope for the sake of all the retail money involved that they are able to get at least some of their value back, because it was really marketed as something really safe. They didn't go as far as Voyager and state EIC protection, but they said this is basically a better bank, unbank yourself. This
Right.
is all legit, and it turned out it was just as sketchy as everything else. So I think there's something, there's a difference when you make a mistake, and but there's a difference between making a mistake, misrepresenting something, and like doing it on purpose. It seems like they did it on purpose, kind of like, I don't know, the Anchor protocol as well. And it just goes to show you need to do your research into these platforms. Like, while price action is great, I think it's just as important, just in my opinion, to understand the technology, understand the differences behind it. Just like a lot of people do with stocks. With stock companies, they'll compare which one's doing better, which things are doing similar, and kind of weigh them against each other. I think we can do a lot of the same things in crypto and use a lot of the same metrics to discover the health of these companies and be able to make more confident investments in them, especially long term.
No, I completely agree with you. And I mean, that's something that our viewers that have been with us, for a few episodes now have heard us say multiple times is like, we have to be careful. This is a dog eat dog world, unfortunately. And there are people that just don't care. That it's yours. They're like, no, it's not theirs. It's mine for the taking, right? Finders keepers. Recently, we just saw the FBI warning that fake crypto apps cost investors up to $43 million. Um, Again, fake cryptocurrency wallets that have defrauded unsuspecting users millions of dollars. So just think about that. If it doesn't have those protocols like the secondary password, the two-factor identification, if it looks sketchy whatsoever, we have to be on top of these things. We need to be educated. We need to understand that you should not just click a link, that sometimes investing into what, a $5 VPN a month, I think like NordVPN, you could probably get it discounted off of some YouTuber influencer. It's an important investment to make, because you're not investing into just like internet protection. You're investing into your asset protection, into your fraud protection. I mean, we see it every day. You go to the gas station and all of a sudden you have a transaction in like Hawaii, Las Vegas, and you're like, that wasn't me. And there's been cases where I've seen people don't get their money back at the bank, right? You had a fraud, but they're like, no, we think it's actually you, even though you're telling us you're in the state of Florida, but this transaction was done, across the world. It was you who did it, so we're not giving you your money back. Same thing's going to happen in crypto. Same thing's going to happen anywhere else on the internet, right? So again, it's just triple dotting your I's, triple crossing your T's, making sure you guys are looking at everything. If the color looks off, I'd probably, just double check it, run it through our VPN system or any, bug checker if you have one. Just be safe out there and don't take the easy way. That's all, from experience. Just don't take the easy way out. Crypto is not simple as much as we wish it could be. It isn't simple. Nothing in this world, I think, is simple. So sometimes, if this is what you're trying to be in for long term, I mean, even short term, you just have to get into it and really get into it. Right, Philip?
Yeah, I mean, it's really just, what your preference is. I have been trading for a few years now. And for example, I'd say I'm further out on the risk curve. I like to look at, slightly lower cap coins, and I see larger multiples in those. So I look for quality, newer or lower caps. But, people could just as easily stay in Bitcoin and Ethereum and, be fine, uh, long term. So, if you really want to get into it, you absolutely can. But, if you get into it, make sure you do your research. Don't just go throwing your money at like this thing that's pumping this week or whatnot, because you're going to be nervous about your investments. A friend of mine likes to talk about sleep adjusted returns. So, like returns that you can kind of count on, like you can sleep, lay your head at night. And that's something to consider in this. As we talked about with even announcements like the CPI numbers, you could, as a leverage trader, you could easily have gotten wiped out in just a 7% or 5% move for Ethereum and Bitcoin, respectively, in those 15 minutes. So, it really depends on, how much you want to get into this, but what you get into it or what you put into it, you will get out of it because this market rewards you for studying it and participating in it. As I was saying, it would definitely help to get some experience with a non-custodial wallet like MetaMask. That's the most popular one. That's the one I use the most. And really find out how to interact with these protocols directly. A lot of the times, well, not a lot of the times, it feels like there's less and less now, but I've gotten thousands of dollars in what are called airdrops. So, as I mentioned, I got paid for testing a protocol before. What these things called airdrops are basically rewarding early users of the protocol who didn't know they're going to get rewarded. They just happen to, like the protocol. They might have been in sort of beta testing group or just like just really helping the protocol to function by staking, by doing XYZ, and it'll reward you. One of the biggest ones I got was for Ethereum naming service. I got a clarkcapital.eth, and yeah, feel free to donate there, accepting all deposits. But yeah, I got like a couple $1,000s in ENS tokens that I was able to just, sell immediately because I didn't know what else to do with it. But yeah, all kinds of things. So it's really like, and I think once you get more hands-on, you start to understand things a bit better. It's one thing to listen to people and to read about it, and it's another thing to really like kind of get your hands dirty, understand, okay, this is how gas works, Ethereum gas, and I see how it changes from one second to the other, and how different transactions like minting an NFT cost more gas than just sending a payment. And you can use this information going forward to evaluate projects to see, what's really providing a real use case, something that you see as useful. Kind of like people say, like, invest in companies where you use a product, you see value. It's kind of like the same thing here. Like if you see value in it, if you see yourself using it, if you see how it could help other people, like other people use it or other people get online, other people do XYZ, then, it's providing a valuable use case. So, and you'd be surprised all the different things they have in the works now. I mean, Helium Network is developing a decentralized internet that's basically run by people who each have, just a network of nodes just in their apartments, just everyday people. And they're going to be rewarded in the Helium tokens for helping to run that network. And it's going to, I think, have a cell phone plan with it as well. So,
I'm waiting
there's,
for it.
yeah, there's
I'm
really
waiting for
cool
it.
really exciting killer use cases out there. They might not make the headlines like Ethereum and Bitcoin do, but there are some really specialized projects that are doing some really cool things in this space and doing things that wouldn't be possible without blockchain and cryptography. So yeah, definitely dive in, see what you like, see what clicks with you, and invest where you see value. And as Jasmine and I said, make sure you practice proper risk management. Don't invest what you can't afford to lose. That's the number one rule. You have to be comfortable with it going to zero. And not that it's going to, but like it's just you have to go into it with that kind of mentality because this market is wild and has cleaned many smart people out. And I think the big difference between the people that stay in it and the people that like get wiped out and leave is that risk management factor. So yeah, just any way you can improve that, by all means do.
Yeah, that's
And
actually
we have some tools like that in Vector that allow you to control how much you're able to gain on a certain day, how much you're able to lose on a certain day. That kind of takes the emotion out of trading, because what a lot of people will do is if they happen to make a bad trade or a good trade, the emotion will kick in, and it's kind of like like a hot table at the casino, or like trying to
Mhm.
win it all back, and like you let emotion get involved, and then you start trading based on emotion rather than logic, and that's the last thing you want to do. Whether it's revenge trading or trying to double up on what you just doubled up on, you need to have a plan. You need to know what you're doing going into it, and you want to stick to it. And the tools like the risk management and the sub account manager in Vector allow you to do that. So, yeah, to all of our traders, I highly suggest taking advantage of that, and don't let emotion get involved. This is a market, and it has no feelings. It just does what it does, and you have to deal with it. So, yeah, be careful.
Yeah, Philip, it's like you read my mind. I was just about to say that because, from experience, my husband, when he first started trading, it was with stocks, right? For like the Forex trading, it was in the military. They actually have like a big Forex group there. And I remember he was super excited because he was like, "Look, I just made like $1,500 off of a small amount. I think it was like $50, something like that." And he lost all of it, all of it,
Mhm.
in like
Yep.
a few minutes, um, because he let the emotion, the excitement get to him. And with the risk management tool, you can even set it so that if you make too much of a gain, you lock yourself from making new orders. Because again, you have to remember, like, greed is what will always get you in like the bad place. And it's not that you're being greedy like towards other people, but for yourself. You're like, I'm making more money. I can make more. I can make more. But we have to be cautious, and we have to put that emotion to the side and say, hey, although I can make more, I'm setting myself up to make a decent profit, but not accidentally like lose everything I just did. Because you're putting time into it, you're putting effort into it. You don't want to just knock over your Lego tower, right? After you just spent hours building it cautiously, placing things where they need to go, building your strategy, analyzing the market. And then all of a sudden you make one wrong move, right? It's just toppled over. It's the same thing when you're trading. You're putting a lot of time, and like Guillermo said last time, he tests out his strategy in his simulator account first. That your simulator account, it doesn't go away once you're like, hey, I'm a professional, right? You can continue to use that even as a professional. And I would say that most professionals will continue to use that in the rest of their trading career to make sure that they're doing the right moves for their financial gains and profits. Well, I think for the most part, all we had to touch on today. Any other breaking news that we could just touch on last minute? Anything like that you've seen, Philip? I actually saw on the crypto report on Vector, Sandbox is partnering with Tony Hawk to build the largest virtual skate park. And I don't know, I just thought that was kind of cool. So I've actually seen Tony Hawk driving around in his golden Lamborghini here in the area once before. So it was pretty cool to see that. And now he's building a virtual skate park, Sandbox.
That's cool. Yeah, I guess the last thing I want to touch on, besides the Celsius bankruptcy hearings, the Three Arrows Capital getting more details. Apparently, it owes
No.
$3.5 billion to 27 different companies, including Blockchain.com, Voyager Digital, and Genesis Global Trading. Of that $3.5 billion, Genesis actually was responsible for loaning them $2.36 billion it was under collateralized and had a margin requirement of 80%. So 3AC defaulted on that. And it looks like their parent company, Digital Currency Group, which is one of the largest just firms in crypto period, is picking up the tab. But that is a massive, massive loss. I mean, in the billions, obviously. So yeah, I mean, I guess the fallout really isn't done yet. Like I said, it'll be interesting to see what they do with these assets that they have on their books, some of which might be liquidated in order to continue to try and create a runway for these companies to try and restructure. That's something to keep an eye on. But yeah, apparently the 3AC, the bad news just keeps on coming. But Digital Currency Group, what was that?
I'm feeling secondhand hurt for them. Like,
yeah, but Digital Currency Group is massive. I mean, I'm sure it's not a drop in the bucket, but it's something I believe they'll be able to pick up and remain solvent. So, but yeah, it's just something to keep an eye on as this news keeps coming out. And people have tried and separated themselves from 3AC, but like as you know, these bankruptcy filings come out more and more, we'll get the truth and we'll get clarity on exactly who owes what and the financial health of everyone once everything's said and done.
Yeah. Well, as we always say, is the truth will always come out eventually. The market will always correct itself. And although the market doesn't repeat, it does have patterns and cycles, and it does mimic, right, what happens in the past. So all we can do is be as prepared as possible, prepare for the worst, hope for the best, and make smart decisions when trading, make our best educated guesses as we used to do in school at some point. But thank you, Philip, once again for giving us some really great information and a wealth of knowledge. This is just, some of the touch points for our viewers and for anybody who's maybe watching us for the first time or their first time getting into crypto, to really share with you guys, why things are happening, where we see the market going, and continue to keep the masses informed. So we thank everyone for watching. We appreciate your support. So thank you guys again. Don't forget to like, subscribe, and turn on your notifications bell. Check out Vector 15-day free trial. As you can see behind me here, I actually have the mobile version on my tablet. So definitely check those out. You can trade any place, anytime, anywhere. So awesome to see you guys again. Have a wonderful week and stay safe.
Take care, everyone.